Hey traders, John Howell here. Welcome to today's market update, getting you ready for the week. I want to be sharing with you gold and also silver as well too. Bit of an update on the mining stocks, especially gold. Gold's got an interesting pattern that I want to share with you. Plus also there's a whole bunch of other stuff that I want to share with you. I want to walk you through the Wall Street, what's called as the Wall Street cheat sheet. Try to say that twice as fast. Also, I want to be looking at the crypto market as well, too, guys. There's a lot of stuff that I want to just help you out with today, and hopefully, my goal today is not just to give you a market update, but to give you some techniques, some tools you can use in your own trading to help you become a much better trader. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders, let's get straight into it. Guys, if you haven't done so yet, make sure you grab that free trading course. I'm giving it away for free. I know other people sell it for, $500, $1,000, all that sort of stuff, guys, but I'm just giving my trading course away for free. I used to charge for it. But if you need your help, guys, just go get free access to that, okay? Just go get the help you need. You guys can become amazing and incredible traders. I really believe that. I really, truly believe that. Before I get into the market update, the hardest thing for you as a trader is trying to filter through the bullshit that's actually out there in the marketplace right now, because literally 80% of the stuff that you're going to hear, read, or see is not going to make a lick of difference to the bottom line of your trading results. You may, and I did just burp. You may be learning a lot. You may learn a lot about stuff, right? Like, oh, this is what's happening with the markets right now, and this is what's happening with the economy, and the fundamentals, and blah 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 blah. All that, Afghanistan, and the vid, and the cough situation, and the lockdowns, and the case numbers, and right. And literally, I'm telling you right now, 80% of the stuff out there is actually going to not make a lick of difference to your bottom line. And it's actually filtering through all that stuff that, okay, I can learn a lot, but it's actually not going to help me make money. I want to know what are the things that I need to become good at that's actually going to make me it's actually going to make me money. And again, in that free trading course, that's what I really break it down into. Like, what are the main things I need to be focusing on, and not all this other crap. So let's get straight into it now, guys. Market update time. So gold right now has been doing something really, 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 really interesting, and that is that I've been noticing that more and more and more as time goes on when it comes to gold. This is gold on the weekly chart with my 20 moving average here, and I've been noticing a lot of people have been sort of just getting frustrated with gold, getting cranky with gold, getting just, they're just fleeing gold. Like, they're like, I'm getting out of gold. I don't want to be in gold right now. I'm just getting out. I just want to be out. And one of the biggest problems that I see with moving forward with your particular trading in yourself is that if you are in a situation where you're just like, you're in a position, but there's no real plan, like there's, okay, well, if it gets here for a loss, I'm going to be out of this position, and so on and so forth. Or you might just be buy and hold for the long term. If you are buy and hold long term, mean for the next 5 years, then please don't get emotional about an up and down movement, all right? The market goes down, the market goes up, but please don't get emotional about that, because you can never pick the bottom, right? But the long term with gold, I really do see like some incredible moves coming, especially as we get towards the end of this, what we call long-term debt cycle, where we are right now when it comes to the long-term debt cycle. Is obviously, as the decades roll on, the US gets more and more and more and more and more into debt, and suddenly something snaps, a restructuring, a default, or something like that. And that's when you get to the end of the long-term debt cycle. So I truly believe something's going to happen with gold that's going to see this thing move to the upside. I don't know what it's going to be, but I honestly see an incredible move coming out of gold, and also silver, and also the mining stocks as well too. But looking on this on a more of a technical basis, guys, we can see we've had a move down and we've had a very, 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 very strong move up. Now, the interesting thing about this here, which I know a lot of traders will be like, huh, that doesn't make sense. If I look at gold's had a very strong move up, but if I look at, say, the gold mining stocks, they're about to break into a new low for especially for this year, right? Because this is the last low for this year. And actually a new low for the next couple of years. So I wouldn't be too surprised if we did see a flush down coming out of the mining sector here to push it down. And this is where looking at the mindset of probably people that are in the mining sector right now, they're probably holding on to their mining stocks right now because they're thinking, okay, well, if gold's going up, then surely the mining stocks, gold mining stocks are going to go up with it as well too. So I'm just going to hold on. And so we're probably going to get a little bit more weakness coming on the short term anyway, out of the gold mining stocks. The GDXJ is actually already broken below the low through here, and we're continuing down now, selling all the way down, bam, 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 all the way down. And so we can see that. And so looking at this gold, I wouldn't be too surprised if we actually saw probably a little bit of a weakness coming into gold on a short term basis there. So we're seeing a very strong move down, a very strong move up. And if I use my Fibonacci tool from this low through to the high point, I wouldn't be too surprised to see gold. And again, guys, I don't know this is definitely going to happen, but I wouldn't be too surprised to see gold actually have a little bit of a pullback through here. And one of the reasons why, you can see how that right now gold is this $1,800 level right here. Look at all that support, which was resistance. So now we're at a little bit of resistance here. But this is the big key for gold, and the one thing that I'll be watching out for moving forward. The Fibonacci levels here, we've got this low level through here around that $1,760. $1,760. Yes, yeah, I got that right. It's like 1,760, 1,760, same thing. We can see that if we do get a bit of a pullback here, all right, the key thing that I'm looking out for is that if the market does pull back, now this is the if scenarios, right? It may just break up and then forget what I just said here altogether. But if we do get a bit of a pullback, we're probably likely to drag the mining stocks down even more, which is probably going to be the last. I believe with the mining sector right now, we're getting very, very close to having a major low in the mining sector. So, but if we do get a little bit of a pullback, the key we want to watch out for is if we do get a pullback, where does it find support? Does it come back down through to here, and we have a 50? Is this level through here, which is the 50% Fibonacci? This is the 30. This one right here is the 38.2, and this one right here is the 50% Fibonacci. Now, if the market does pull back here, okay, and we do find support through here, and then we start to rally up, and we do something like this, and we start to break up, then that's going to be really, really, really bullish for gold. Very bullish for gold. And let me explain the reasons why. If we have a look at gold, we see gold's been going down through here. But when the market has what we call a 50% retracement or less in a move, that's actually pretty powerful. But what's even more powerful is that when the market is in a downward trend, right? Because right now we're in a downward trend, high, a low. We have sort of a lower high somewhere through here, and we've had a lower low. And now this could be another lower high. All right, so the market is in a downward trend. So for the market to tell us we're now changing that tune from a bullish or from a bearish downward trend to a bullish, what's in an upward trend? An upward trend is what? It could be a higher low breaking past previous highs, right? So we have a low, higher low, breaking past previous highs. Because in an upward trend, what do we have? Higher lows, breaking past previous highs. So this would be, right now we have this low. So this is the low point through here. If we do get a pullback, okay, if we do get a pullback, this is the thing that I'll be watching out for to say, okay, do we get a higher low here? Because that higher low is saying, okay, the big boys right now are coming in. And the big thing for me I want to see is, do we get a higher low, then rallying back up to break past previous highs? Remember, guys, it's the higher low breaking past previous highs. That's going to be the big key for the market to tell us, okay, we're now getting ready to kick back in again, and it's the higher low if it's the higher low, and then it's once again, it's this point through here is where the buyer say, okay, we're now getting ready to come back in. We're now getting ready to come back in. If we can get something like this, then it's going to be very, very powerful. And I wouldn't be too surprised if we do get that, then we're likely to start to see a very nice move back up to possibly even to an all-time new high for gold, like overall that is. So that's what I'm seeing through there with good old gold. But silver, different. Silver is, there is no bullishness whatsoever. What do we have here with silver? We've had a very nice downward trend. We've had a high, lower high, lower high, lower high, lower high. Like the market's continuing down. Not only that, but look at my moving average. Look how strong this moving average is. It's like silver, it looks like to me that we're probably likely to get a bit more of a selling into gold here. This low point through here is a major significant low point. If I zoom out my charts a bit more, we can see how we have a low point and a low point through here. And so this $22 point and this $22 point through here, I just had like, when that happens, when you're talking and you have like three ideas or three things come to your mind all at once, and then you want to say it, but like, okay, and your brain's like, bzz, okay, which one do I say? Bzz. 1, 2, or 3. All right, reset. That's what happened to my brain just then. It's like, okay, 3 things came to my mind. 1, 2, or 3. I'm like, no, reset. Anyway, resetting is this. We have a major significant support here around the $22 level in silver. Now, what's below this level here is going to be a lot of stops that people have been buying through here. They're probably going to have, a lot of them have a stops below these lows through here. So the market loves to run those stops first. The market loves to run those stops before it's going to do its thing, right? But then then that's where like there's probably a good probability we're likely to continue down and come down and flush down below here. So not only is it likely to run the stops, but also what happens is there's a lot of short orders here as well too. Or people start to go short because they're like, oh, it's breaking below key support level. Let's go short. So all these longs that have their stop levels here, bam, they get taken out. Bam, they get taken out. Bam, they get taken out. Then suddenly you start to get this member of short positions coming into, because then they're short. And then the big boys say, you know what? No, we changed our mind. And then it does that on you. And all these longs are sitting here going like this. They're like, what the hell happened there? And the shorts are like saying, what the hell happened there? Right? And the market loves this, especially in key levels. So this is what I'll be watching out for. Probably on a short-term basis, guys, we're probably likely to see a lot more selling in the markets. But moving forward, that if we do start to get something like this, where it flushes down and comes back up, then it's probably going to be ready for a very, very, very big move in the markets. Moving over now through to the Dow Jones, and the Dow Jones right now, guys, has continued to be in a very, very sort of nice Chanel through here, but we are starting to get a very, very nice clear breakout. As you can see through here, we get a very nice clear breakout. We've come back down, and now we're right at that support level around the 35,000 level. So the big thing for me is what I'm watching out for right now is after this channel that we've been into, I want to see if we can look at this on a short-term basis, looking at the Dow Jones. If the Dow Jones starts to rally up and we start to get a close above here, then I believe we are on our way to 40K. We're on our way to 40K. If we can break past this higher level here. Now, it won't go straight up. We'll probably get a move for, a few thousand points and maybe go sideways and then have another run and sideways. But that's what I see happening there. Now, I do see we're likely to see quite an extraordinary move coming into the end of this year. I just see one crazy blow off top move. I don't believe we've actually seen the blow off top yet. But I believe the market's getting ready to have that there. So, but that belief could also be wrong as well too. Okay. And looking at the S&P 500, very, 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 very nice, clear upward trend. Look at the moving average trending up. And all we had here is a bit of a pullback, and now we're actually having a bit of a move to the upside as well too. I have on my S&P 500, I have a target of at least 5,000. and then possibly even 5,400 by the end of the year. But my first target is 5,000 in S&P 500 by the end of this year. And looking at the good old Nasdaq, the Nasdaq has just been going really sideways, had a move up, and now we're just sort of flattening out through here. But if you look at the major low levels, so we have a move up and then a move down. We've had a move up through here, and then we've had a move down. So you can see there's major low levels. This is a low level through here, low, or it's probably back here somewhere. But low, significant higher low, significant higher low. So we're still making significant higher lows. Now, the interesting thing about the good old Nasdaq is that when looking at the good old Nasdaq, firstly, very beautiful weekly. This is a weekly chart now. Very good and beautiful weekly upward trend through here. You can see how we had a lot of resistance around the 14,000 level, and now once we broke it, it came back down and tested it as support. See it right there? That's actually a very, 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 very important point there. And the reason why is because it says, okay, these points through here, remember guys, this is a weekly chart. So these points through here, and that point through there, and that point through there, shows even these weekly bars had problems breaking the 14,000 level. Once we broke it, it came back down and tested as support. The reason why that's important is because the next few weeks are going to be very, very, very important for us to say what's happening here. Because right now we're sort of just having a bit of a sideways flattening out period. Now, is this going to be a false breakout when the market breaks out and breaks back down? We'll have to wait and see what the market does that. But if the market does come back down and close below the 14,000 level, which I don't think is going to happen, but hey, that's the beauty about markets, that you always got to be prepared for both scenarios, right? So if the market does come back down, close below 14,000, guess what? It's closing below not only this significant resistance and support level that's been there and has been respecting it, but we're also closing above. Let me actually just zoom this out a bit more. We're also closing below, this major significant trend line. So this here would be a double whammy. So this is where very, 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 very important sign to see if we do get something like that coming into the Nasdaq over the next few weeks. That's the thing I'll be keeping an eye out for. Now, on the flip side, when it comes to good old Nasdaq, on the flip side, if this is a hold here, which I personally believe it is, because I have a target of 17,000 by the end of this year. That's just my target. I've had that target for quite some time. I'm long the QQQs with call options right now for the rest of this year, and I have been now for the last, I think, month or two right now, ever since the breakout. So right now that we're at a point right now where we're getting this sort of flattening out, this flat top through here. The question is that if we do hold here and suddenly we get a nice little breakout week like that, that's going to be so super duper powerful. And we do something like this here, something like that. That tells me we're now breaking out of this sideways phase, and we're probably going to start to do something like this on a week by week basis, all the way up to 17,000 and maybe even higher than 17,000. But I do have an initial target of 17,000. But if we do break out there on a sort of a conservative target, you can see where my channel is, right? We have this is where the market's bouncing off the support all along. And now we're actually holding it. So if we break up, at least I would say a target would be the top of this channel, which is, as you can see, that's actually, it doesn't sound like much, but that's still like a nice almost 12% move, or depending on how long it takes, right? Yeah, but it's basically a 12% move, to the upside. And then again, I see 17,000, and then it may just continue on from there, but that's where I see it happening there. So that's what I'm looking at there when it comes to the good old stock market, guys. But they're the important points, and you can see the important points. All I'm doing, guys, is I'm just really reading the trend analysis. I'm reading significant support and resistance, which I get from the weekly charts. The weekly charts are very, very, very important, guys, to get those significant levels. Because on the daily charts, we can get a lot of levels, but they're not really significant. If we want to have these significant, which is like this point through here, then we need to keep an eye out for that. So what I want to do right now is I want to have a quick look at the Russell 2000 index, because the Russell 2000 index is doing something completely different to the other indices. And as you can see, guys, you can see the Dow Jones is doing something different to the S&P. The S&P is doing something different to the Dow Jones. The Nasdaq. The Nasdaq is doing something different to the Russell 2000. So what you want to do is you want to make your decisions of what that particular market is doing based on that one particular market. Don't have a general view of, oh, the market's bullish today. That's a general view. That's true. We could have all these markets pretty bullish, but you want to do your analysis on the individual markets. It's like, okay, then this is what this one individual market's doing. Just like when you're trading a particular stock, right? Some stocks you could actually say, okay, then this particular stock is in the S&P 500 is bearish, and so you have to go with that, with bearish as well too. Make sense? So when it comes to the Russell 2000, we're getting something really, really different here, where we just had a strong move up through here, but now we're getting a very strong flattening period. Again, this is a weekly chart. If I go back to my daily charts and open my charts right up on the Russell 2000, then look what's happening here. This is actually weak. This is definitely weak. Let me actually bring, I'll just keep it with that there. Actually, let me just bring this chart up here. I'm just trying to focus on what the market's doing here. But look what's actually happening here. We've been in a channel here for quite some time. This has actually been a very, 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 very strong channel. Now, the thing about this is that this is actually looking bearish as I speak right now. We're actually getting, this is really weird. And it's again like, I don't know. I'm just reading the markets, right? Like I have to just read what the market's telling me. But if I look at this, we've had nothing going on through here. We've had a lot of support around this sort of $210 level. This is the IWM, the Russell 2000 ETF index fund. But around 210, same thing for here, same thing, and same thing here. But then we've had a lot of resistance around here, and here as well too. So we're getting a lot of sort of support and resistance through here. And the thing is like, this is actually looking quite weak because we've had a high, we've had a rundown, come back up here, we've had now another lower high. And if you look at the Fibonacci levels, bring on the good old Fibonacci retracement. Let's go from the high down through to the low. And you can see how that this here, it didn't do the 50%, which what I like to see, but you can see definitely the 60% definitely held. And then guess what? Now we actually started to break down to the downside. So this is actually looking quite weak on the downside. So if we do get a breakdown through here, then we may be getting ready. The Russell 2000 stocks may be getting ready for or at least the ETF anyway, maybe getting ready for some downside action. We do have a gap down the bottom here. You can see how, if I just zoom in on this one here a bit more, there we go. Right, see this gap? There's a bit of a gap here that hasn't been filled yet when it comes to the Russell 2000. So we haven't had the gap fill, so it may fill that gap. And as I'm doing this analysis, I've just seen a pattern here. So let me teach you this pattern. If you ever see a market come down through here and then have a bit of a gap like this, and then it gaps down like that, but then it just does nothing, comes through here, and then something gaps up like that, and we start to move up. This here is called an island reversal. It's called an island reversal. So if the market's going down, 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 and gaps, and then does nothing, but then gets back up and starts to do that, this is called an island reversal. The reason why it's called an island reversal is because it looks like an island, right? It's been going down, 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 it gaps away, and then it just does nothing here, and then it gaps up, and as it gaps up, it continues, and now it creates like an island, and then suddenly it's a reversal because it's now going to the upside. And you can see that's exactly what happened there. And then we continued up from there. So if you ever see a pattern like that, guys, this is called an island reversal. This is actually a pretty powerful reversal pattern in the markets. And the same for the upside. If the market's going up for a while, but then suddenly gaps and then does nothing, and then gaps down, and we start to get a bit of follow through, we want to see a follow through, then this is called an island reversal. It was going up, creates the island, and then reversal. And it's a reversal from the bullish trend down to the bearish trend as well. So there's a little bit of pattern I just recognize, and I just wanted to share that with you. So moving forward, once again, going back to the Russell 2000, we can see what's going on here. This is really, really, really interesting stuff. So are we about to see a drop to the downside? Now, if we do once we do break out of this, there is a projected target based on this channel that a lot of the times, I'd have to say like 80% of the time, it actually hits it. So once we actually break out, we've actually got this strong resistance up here around 235, strong support around 210. So what we do when we see these channels, we break it to the upside. Okay, so we do that, right, and then we bring it back all the way back down to that 210 level. And then what we want to do is we want to start to break it to the to the downside like that, as you can see. And then what we do is we measure from there to there, as you can see, like that to there. So that tells me that if we start to break out here, now there's no certainties here, guys, because a lot of times, sometimes this can be a false breakout, but I'd have to say, as I said before, like 80% probability. Especially if we could start to get like a bit of a sideways movement through here and then a breakaway, that'll be even more powerful. We get that, then there's probably a really, really good probability we're going to end up back down to here, because that's the target for that. And I see that happen so many times, but there is probably 20% of the time where it breaks down, it does nothing, and then it breaks back up. And now it's called a slingshot pattern instead of just a breakout or breakout to the downside. Now it's called a slingshot pattern. And based on that there, as you can see, guys, trading is all that's okay, this is what the market's telling me right now. And so if we get a breakout, okay, well, there's a high probability we're going to get down to here. But if it starts to do something different and we start to get something like a breakdown and then a reversal back up again, then you must be saying, okay, the markets no longer have a high probability of doing this now. It's actually creating a slingshot pattern. And now we're actually probably likely to reverse back up and have a big move up through there. So this now would be a false breakout. And sometimes at the moment, it's very, very, very hard to tell. But once again, let me actually just share this with you here. If we did get the breakout through here, like that there, then you're like, okay, cool. Now we have an 80% probability of getting down to here. All right, that'll be, call it 80%. Cool. Well, okay. And if you do enter right here, then what happens? Okay, then now you're in. But what you want to do is you don't want to be all in. You want to have good risk management, because there is still 20% chance that it doesn't get down to the here, that this now becomes a false breakout and a slingshot pattern. And then it does something like this and then gets back up above like that. Then what does that mean? It's no longer a breakout or a breakout. It's not a breakout anymore. It's not a BO. It's a false breakout / slingshot SS right, SS slingshot pattern. And what that means is that if you got this, you wouldn't want to be short this market and sitting hoping, praying, because now if we get this, now there's a massive probability we're going to get up to here and even a lot higher. Make sense, guys? So no matter what market we are entering in, always have that caution, like, okay, if I'm entering here, this is what the market's telling me right now. But if the market starts to do something different, I need to be out of this thing quick, smart. That's called keeping your losses small and letting your profits ride. Because if you had this same thing here, where 20% of the time you took 10 of these trades, and 2% of the time, 2 or maybe even 3, let's be real conservative. 3% of the time I did this, but then the other 7 times it actually went down to there. Well, your profit's going to be much bigger than your losses. You got a pretty good win-loss ratio. And that's how it's happened through there. So always keep an eye on what the market is telling you and be flexible with the market. Just because the market's doing something right there and it's saying that, if it starts to change the tune, we need to be out really, really, really quickly. And it's something that a lot of traders, they get married. Even some of my private clients, and I just want to clip them around the head, because we may get into a trade and it just it's not working out for us the way that it should be. So we get out for a small loss. And then some of my private clients, what I'm talking about right now, you just hold hope and pray, and then suddenly it's like, it's 2 months later, you're still holding that trade. It's like, no, the system said get out, keep your loss small. So that's what I want to, that's what is happening with the Russell 2000 through there. Now let's go have a look at oil. Let's have a look at oil here. Sorry, not oil. I want to share something with you when it comes to the good old Bitcoin market. So this is the good old Bitcoin market, and then I want to, let's actually I've got a few other things in my mind that I want to share with you in today's training. But look what's happened through here. All right. Remember I said before about listening to the market and listening to what the market is doing. Let me just take the volume off here for a minute. And we'll just keep this moving average we're looking at here. Is the 52 moving average, and I'm using a daily chart right now on the good old Bitcoin. And we can see here with the good old Bitcoin that look what's happened here, right? You can see, remember I said before about just listening to the market and not sort of ego getting your ego involved. Look at this here. We've had a higher low, higher low, higher low. But look what happened here. We had a low and a lower high. Remember, in an upward trend, we have higher lows, higher highs. In a downward trend, we have lower lows, lower highs. Look what happened here. Lower high, lower low, and then what? Boom, the market crashed. So when the market starts to tell you something like that, that's where the warning bells are starting to come back in. But then look what happened here. Look what happened just recently. What did we get? We had the market coming down, right? Coming down through here. We had a little bit of a triangle pattern. We actually broke to the upside. Higher high, higher low, breaking past, and now we're actually going for a nice move to the upside. So always keep an eye on what the market is telling you, what the market is doing, because it's really, 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 really interesting to see what's happening through there. And we're getting a lot of movement in the crypto market, guys. So if you do have a successful trading system, make sure you keep an eye on the crypto market, because there's a lot of movement and it could be a lot of successful trades coming your way. If you don't, then again, in my free trading course, I actually share with you my trading system that I use, so you can actually learn that as well too. So make sure you keep an eye out for that, guys. Now, also what I want to share with you is the next off the rank. Oh, by the way, guys, leave a comment below. Let me know if you like these, if you do like these more longer, in-depth sort of training market updates. You know, I can just do like a quick short little market update, but I also like to, lately I've been doing a bit more longer updates and just trying to help you and teach you, not just giving you an update, but also teaching you stuff as well too. Leave a comment below. Let me know what you think. Do you actually enjoy these more longer, more in-depth sort of training styles as well too? Now, here we go. Looking at this war sheet cheat sheet. It's just, this is the cycle of the way the market works, right? We go through booms and bust, and the human psychology never changes through history. All right, this is the reason why. This is where we go through here, and as you can see, we have booms and we have the bust. Now, the interesting thing is, look at this here. Look at this here. I remember when it comes to, if we look at Bitcoin, right? I remember Bitcoin. When Bitcoin was hitting 60,000 plus, all I heard was how many people are jumping into Bitcoin right now in the crypto market, and they're going to make $1 million. And they're actually hearing stories. They're hearing all these stories of how people are making all these millions of dollars in the markets, and they're going to make so much money. This is where the leader, the 3% of the people who actually do well out of trading, this is where they have the radar on. Hang on a minute. There's so many people screaming this thing. That's making me nervous. And that made me nervous. I wasn't in Bitcoin. I was like, so many people are bullish right now in this markets. That's making me really nervous. Really, 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 really nervous. And I'm just getting to it, right? And, it's, what's this? Thrill. I will buy more on margin. Got to tell everyone to buy. Yep, that's obviously there. I am a genius. We're all going to be rich. It's like, I even heard a network marketing friend say, well, I'm definitely in Bitcoin because it's only going to go up. I'm like, did you just really just say that? Nothing is guaranteed in the market. Nothing. Right? You can have the best fundamentals of a stock and it just gets hammered for some reason, right? It's like, there's no guarantees of anything. And when I heard that, I'm just like, I don't know about this. And when you started hearing the stories of people making millions of dollars and all this sort of stuff, guys, guess what? We're getting pretty close to the top, right? And as you can see, look what happened. We had a drop down, we had a rally up, we had a lower high in Bitcoin, and then we had the crash. And now guess what? We've flattened out for a little bit, and now we're starting this cycle again. So Bitcoin cycle right now, to me, is that we went through the booms and busts. This was 65K up here in Bitcoin. And now we had what? We had the drop down, then we had a little rally, and then boom, way we go down and panic, selling, blah, 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 crash, anger, fear, frustrated, blah, 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 right? Just go crazy. That blah, blah, blah is them just going, oh my goodness, right? And then just people just going, oh my goodness, shit, everyone sell. And then guess what? We had the flattening out period, didn't we? We had a flattening out period for a few months, and now we're starting to do what? Start to run up to disbelief. We've just recently had a little bit of a low. We're now breaking back up, and now we're starting this point through here with Bitcoin. And guess what? This looks exactly like what Bitcoin's doing right now. We had the crash, we had the flattening out period, we had a little rise, we had a little nice little higher low. We broke past this back to here now, and now we've just been slowly rising. So maybe, just maybe, good old Bitcoin is getting ready for this again, right? So keep an eye out for that, guys. We're getting ready. Anyway, now when it comes to let's actually use this cheat sheet when it comes to silver, gold, and the mining sector. Okay. Now, when it comes to the mining sector right now, or when it comes to gold and silver had a very big move up through here. And I remember when gold got to $2,000. I heard everyone saying, you gotta be, right? With this here, you gotta be. That you gotta be is like, you've got to be in gold and silver. You gotta be in gold and silver. You gotta be in gold and silver. You gotta be in gold and silver. But what's been happening lately, right? What's been happening lately is that the market's been dropping down, going down, and now I believe we're starting to get into the denial and maybe even a bit of a panic here. Right, because the market's going down, and I'm starting to see a lot of people fleeing from the mining sector and even gold. Right, they're just getting cranky, getting frustrated, and getting impatient. So, are we about to see a bit of a capitulation? Right, are we about to see that, or maybe we've already seen that when it comes to that? Maybe what we saw last week with that flush down with gold, maybe that was the capitulation, and now we're going to be starting the new upward trend. So I'm not sure about that. We are still seeing a lot more weakness in the mining sector. So, but I believe with the mining sector, we're getting very, very, very close to this level down the bottom here with the mining sector. And we're getting ready for this move through here. So that's where I believe. Again, guys, leave a comment below. Let me know what you think about the Bitcoin analysis of what I see here in the mining cycles. Leave a comment below. Let me know what you think about what I said about gold and silver and also the mining sector as well too. So, but silver, I believe we're going to see this coming soon, a bit of a capitulation coming in the markets. And now let's use this same analogy when it comes to the stock market right now. I see the stock market looking at the stock market, even though the stock market's been going up, it hasn't been going up a lot, right? I mean, it's gone up a lot, but we haven't been going vertical. We've just been slowly, nicely stepping up. So we haven't really made just a blow off move. Right, so we did have a big move, and this one here was obviously, at the end of this is the start of 2020 through here, 2020, as you know, dropped down, complacency, anxiety, denial, and then we had the panic, then we had the capitulation, anger, and then we had a period where it actually really didn't do this. Right, this is what normally happens, but because the Fed came in so strong, guess what? We did that, and then we went straight over here to disbelief. And now we had a very strong rally, and then we've had periods where the market's just gone sideways. The S&P 500, the Dow, even the Nasdaq has gone sideways. And then look what's been happening. We've been slowly doing this, haven't we? We've been slowly stepping up and going up through here. So I personally believe that maybe, just maybe, I believe we're getting ready to enter this phase here, because I don't believe we're at complacency. I don't believe we're at euphoria, or we're just not there. Why? Because we're not hearing, again, guys, this is about listening to the noise, right? We're not hearing about all these people have made millions of dollars from trading. All the people that made all this money from trading, right? It's like, oh my goodness, you got to be in the stock market. You got to be in. The market's going crazy. Let's go. We're not hearing that yet. We were in Bitcoin, right? When Bitcoin got to 65 or 60,000. And then 61, 62, it's like, oh my goodness, man, this thing is so loud. And you're hearing these stories about people making millions of dollars. We're not hearing those stories yet. So, and with the stock market, all I'm seeing is that why the market's going to crash, and why the bubble's here, and why the inflation going to do this, and blah, 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 blah. Right? All I'm hearing is that. Does that sound like a top to you? Like when people are fearful, be greedy. When people are greedy, be fearful. Right now, I believe we're getting into maybe the hope, into maybe a little bit of optimism, but people are still worried about what's going to happen to the stock market because of the Afghanistan and and the COP situation, all that sort of stuff. So maybe we're in from a hope to the getting to here somewhere. So we're probably through here somewhere. So I truly believe that as we move through, and if you obviously with this market update, as we move through to the rest of this year, I just see nothing but this here, with the Fed doing their QE every month, with the 0% interest rates, and now people, and now places like Europe, right? Places like Europe where they're just like, they're negative interest rates. So all this money's coming out of Europe, and now, and guess where it's coming? It's coming over to here, or it's coming over to America to try to get, try to chase some sort of return. So we haven't seen that blow off top yet. We've been slowly stepping, but it hasn't been crazy. I do believe, hence the reason why my money is in that, where I'm long SPY and I'm long QQQs with call options, and have been now for a while, because I truly believe we're getting ready for that blow off top through there. So anyway, guys, I may be wrong. Let me know what you think in the chat box, in the chat section below, and I'll speak to you in the next video. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.